Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday, the 21st of February 2021, and we're publishing the 12th episode in our Bitcoin versus Gold and Silver series. In today's episode, we look at the ramifications of Bitcoin's recent price rise to once again an all-time high, and the spread of this success to other cryptocurrencies. Let's take a look. Now, before we look at Bitcoin's rise and its ramifications, a quick summary of our previous 11 episodes. In episode 1, we explained why we launched the series and why people found Bitcoin attractive. In 2, we confirmed that the size of the equity market, the tradable gold market, and the tradable silver market, how large that is, and how it compares with Bitcoin's capitalization value, which this week, ironically, surpassed $1 trillion. In episode 3, we highlighted a non-exhaustive list of the disadvantages of Bitcoin, which is similar to other cryptocurrencies. In 4, we highlighted the fact that former White House Communications Director Anthony Scaramucci, founder and co-owner of hedge fund Skybridge Capital, had launched a new Bitcoin fund and the reasons for doing so. In 5, we looked at the intrinsic value of gold and silver compared with the intrinsic value of Bitcoin. In 6, we looked at a number of YouTube and Google influencers who've used Bitcoin's rise as both clickbait and an investment opportunity. In 7, we looked at some of the commentary which followed a dramatic $11,000 fall in the price of Bitcoin, and yet support from some quarters stating this was an expected and temporary pullback. In 8, Bitcoin's price falling as low as $28,785, we asked if Bitcoin had now had its day, and we looked at the shortage of microchips and concluded that it is not a short-term fad. In episode 9, with the Bitcoin price hovering around then $37,000, we looked at the likelihood of the Reddit Robinhood short squeeze agents targeting Bitcoin and whether they could be successful. And in 10, we highlighted that Bitcoin had moved back up to $47,000 and that Ray Dalio's Bridgewater Associates had also invested in Bitcoin, and some analysts were predicting a price in the short term of up to $85,000. And then in 11, we talked about Bitcoin reaching 50,000 and the likelihood of that happening, plus pointed out that Morgan Stanley's $150 billion Counterpoint Global Investment Unit was exploring a stake in the cryptocurrency. Also, Deutsche Bank was planning to offer crypto custody to hedge funds that invest in the asset class, and that ARK Investment Management boosted its exposure to Bitcoin in the fourth quarter. And finally, the BNY Mellon will roll out its own digital custody unit. Now, at the time of producing last week's video, the Bitcoin price stood at $49,183, and we predicted that $50,000 was not far away. Now, we published that video on Monday, and on Tuesday, Bitcoin hit $50,000, even faster than we anticipated. And today, it's standing at $57,507. Now, also at that time, gold stood at $1,818, and it closed on Friday at $1,784. And silver, last week, stood at $27.55 and closed on Friday at $27.28. Now, a number of analysts are claiming that Bitcoin's rise is due to two main factors. The first, considerably growing institutional demand, which we flagged up many months ago. And secondly, private as well as professional buyers jumping on board, believing Bitcoin to be an inflation hedge and protection against dollar devaluation. John Wilcock, the chief executive at digital asset exchange Blockchain, is quoted as saying, quote, through the insatiable buy-side pressure from exchange-traded funds, issuers, closed-end funds, and large public corporations adding Bitcoin to their positions, demand is massively outstripping supply, unquote. Now, the effect of the rise in Bitcoin is causing another phenomena, which we've alluded to previously but not focused on, which is why we're talking about it today. And that is the rise in the demand and price of other cryptocurrencies. For example, Ether. The native tone of the Ethereum blockchain reached its all-time high on Friday, exceeding for the first time the $2,000 mark. This happening to Ethereum has caused other cryptos to also hit all-time highs or rise considerably yesterday, for example, and these included Chainlink, Polkadot, Uniswap, and the list goes on and on, in many cases on cryptocurrencies we haven't heard of. A word of caution, though, was published by Bloomberg today. Under the heading, Bitcoin stocks are possibly the dumbest Bitcoin play. This is what Bloomberg quoted. If you believe in Bitcoin, you buy Bitcoin. And if you're wary, you stay away. That's about the simplest way of calculating your investment options when it comes to the world's most infamous speculative bet. Of course, you can join the hordes of Telegram and Reddit groups claiming to understand and predict the twists and turns in the cryptocurrency's price, making you just that much smarter than everyone else. Well done. But there is another option. Invest in stocks of Bitcoin-related companies, including those that supply the miners, the computers that solve the complex algorithms which underpin the cryptocurrency network. That is, buy shovels in a gold rush. That could be the dumbest bet of all, though. Take Canaan Inc., the largest member of the Elwood Blockchain Global Equity Index. The Hangzhou-based company makes chips and equipment used in miners. You'd think that since Bitcoin price and ergo demand keeps rising, then people would be clamoring to buy more rigs. The major incentive to do so is that if you run such a machine, you can yourself get Bitcoin as a reward. And as the price rises, the value of such a prize also climbs. But it's not working out that way. Canaan's sales in the June and September quarters dropped, and it posted 4 straight quarters of losses. That's over a period in which Bitcoin's price rose a sedate 30%. According to Bloomberg data, there's no sell-side analyst left to even guess at its revenue outlook or share price target. Such equity investments are not about the bottom line, though. They're about share returns. In that regard, Canaan has done well by rising 200% over the past year. Tesla Inc.'s announcement earlier this month that it had got into Bitcoin, followed by Canaan telling investors it had secured long-term orders, accounted for almost all of that gain. But this huge return over the past year is minuscule compared to the rise in Bitcoin itself, which is 5 times higher than a year ago. In fact, on aggregate, betting on related equities, as tracked by the Elwood Blockchain Index, would make you a laggard, unquote. So, whereas those of us who buy, invest, stack, or in some cases deal in gold and silver, which we don't, are often attracted to mining companies, as they are often overlooked when precious metal prices rise, Bloomberg is stating, do not be fooled into thinking you will get as good value from Bitcoin mining stocks. Now, that said, of course, there are 1 or 2 exceptions. For example, MicroStrategy Inc., a provider of business analytics software, is now going all in on Bitcoin, and this past week raised around $1 billion through a convertible bond sale for the sole purpose of buying more. That big bet drove the stock to outperform even the cryptocurrency itself in the past few weeks. But this may prove to be short-lived, or will it? Will it start a trend? Now, while gold and silver are languishing currently, and gold particularly appearing to be out of favour, if only momentarily, the investment space and headlines are certainly being taken up by the crypto story. Will it last? Does it have further to run? Do share your thoughts. Thank you so much for listening. If you haven't already done so, please subscribe to our channel. We've also placed links to various books and programs on Bitcoin in case they may strike you of interest, together with some links to previous episodes. Thank you once again. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.